This stuff is very easy to do in hindsight. The key is getting to the point where you can start seeing this stuff ahead of time so you can not only avoid it, but you can profit from it. So keep this in mind. And remember, the main thing here is to keep a level head about this stuff. Just don't get yourself pushed up into a froth. Don't get yourself into a frenzy because of what's going on in the financial markets. Make sure you use the checklists on the website. You use the quick start sequence to make sure that you are going from one step to the next. Build your house one brick at a time. Don't make a snap decision. So you can see we've got this high-level consolidation right here, or expanding triangle that the market pushes up from. Okay, and everything looks just fine. The market's pushing up. Here's our main red flag right here. Anytime you see a huge spike in volume, that should immediately scream alert. Anytime you see big volume, alert, alert, alert. Watch out for what's going to happen next. Now, how big of a volume spike was it? Well, that month, the Bear Stearns traded 86 million shares. Okay, the month prior to that, it traded half that amount, and a couple of months prior to that, it was down underneath 30 million shares. Okay, so we've had nearly a 3 times increase in volume in just a couple of months. And the market is down. So at this point, you should be saying to yourself, okay, maybe there are a bunch of buyers that are coming in. You know, this does look like a buying reversal, doesn't it? And I would say, sure, it could be. But we need to wait and find out. Okay? We always need to verify what we're seeing. So the key is going to be this area right here, this support zone. This is all stuff that we go over on the quick start. We also cover this on CDs 5 and 6. So we see this support zone building. Boom. The market pushes down into it. Now here is our second alert right here. Huge volume spike. Look at this. 90 million shares again. Price closes down on the low. Okay, this is all stuff that I cover in the advanced tactics. This is all stuff that I talk about on the daily videos, the weekly wraps. It's playing out before your eyes. I'm telling you, once you get good at spotting this stuff, you'll be able to act in the marketplace, and you'll see, as it turns out, possibly profit. So we've seen the market come cutting through this support area. It's closing down on the lows. If you're still not convinced at this point, the next stage for the market is called the test process. It's going to then break through this high-level consolidation and then come back up and retest. That's the Little Dipper process. Now, for those of you that were astute, remember Little Dipper, I believe we covered on disc number 7. We also covered on the Quick Start videos. You had a Little Dipper right in here. Okay, the market pushes down, comes up very, very quickly. Volume drops off. The market cannot break through the 618 retracement. I'll go ahead and put that on here. Just a beautiful, picture-perfect Little Dipper scenario. Can't break through 618 retracement, so you've got a short either down here on the lows or a short as the market is coming back down. So from here, what we're expecting is that Bear Stearns is going to continue pushing down. If the market's going to be is going to go bearish, meaning a downtrend, you'll see the market cut through this support area and then come back up. And we see that play out perfectly right here. In fact, on this reversal, remember, anytime you see a big volume spike, you should have a red alert. Look at this, 288 million. Think about this. 1, 2, 3, 4, 5, 6, 7 and 8 months ago, volume was at 23 million. Now it's at 288 million. Okay, a 10-fold increase in volume, and the market has pushed down about $40. Okay, again, anytime you see big spikes in volume, you should be saying alert. Okay, you should be ready for this particular pattern. So again, if the market is bearish, it's going to come in here, retest the support area. It's exactly what it does. Next thing we're going to expect it to do is start to push down. You've either got a short here or a short as the market comes up into the resistance area. Of course, coming into the resistance area, if you're shorting up here, that's a much more aggressive move. So let's go ahead and take a look.